All right. Good morning. Good evening. Hope you guys having a good one. Hope you had a good weekend. The thesis from last week is finally playing out. So we get to see, the strength of tech kind of pushing back into markets a little bit. It's becoming one of the leading sectors now slowly, but of course, we need confirmation further. Just from a macro standpoint, I just want to go through with you guys as usual, the report from this past week and kind of give you guys the lowdown. So if you look at the institutional flow, you'll see that, first of all, in February and March, we're going to be entering a blackout period with the Fed. So they will not be making any decisions with interest rates or giving any comments. But I think this week you have a bunch of Fed, what do you call it, chair people that will be speaking. So be aware of that. Sometimes these people can come on and say some bullshit, and then it causes a little bit of market scare. But largely from the Prime Book report from this week, you can see that hedge funds bought net single stock names, but a slower pace than last week, driven by long buys outpacing short sales, right? Macro products, index and ETF combined were net sold for 7 straight weeks now. So once again, while the market's melting up, these hedge funds are kind of lowering their exposure in index and ETFs combined. And then you have materials, which was the net most bought sector this past week, entirely driven by long buys, which we actually spoke about FCX being a very good setup for this one, and it rejected last week. So we're looking for a pullback bounce scenario for us to take further positioning in this one, which I will alert you guys if I get in. We already took profits on the first one, right? The first time around we traded FCX. Now, another one that has been really just, shining through has been the China trade. China has been ripping through the roof, mainly because of BABA, because of the, kind of dovishness of the CCP, which has just happened this past week. It has been a good week for Chinese equities, especially today being market close. Hang Seng Index is up again about a percent or so. So we're seeing a lot of that. And then, of course, the bond market is starting to kind of move from a place where, it was a lot of focusing on the long-term yields being collapsed. Sorry, the short-term yields being collapsed to now the long-term yields being collapsed. And as a result, since last week I was already mentioning, and this week I'm again kind of reiterating, we are going from the environment where we are going to start to value short-term rates and long-term rates differently. Okay, so long-term rates will start to take off very soon. Okay, now, 1 second here. Which one was it? Was it this one? The earnings surprises, yes. So I wanted to talk about earnings surprises. This is your average earnings surprise. Above this line tend to be beats, and you can see for this quarter so far, right? Misses have been about 10%. Average was 14% in the past. So lesser than average misses, despite what you're seeing in the news, despite whatever. Look at the data, right? Don't focus on anything else. Look at the data. The beats are about 55%, which obviously compared to post-2020 crisis 2021 was a lot more beats, but now we're in a normalized area, which is actually on the high end of beats, if you think about it, right? And then if you look at the median excess return versus the S&P 500 on the day after the earnings report, you can see that that's a little below average. So as I wrote a blurb last week, which I posted on both Discords, and I said, this market has very, very high expectations of earnings this past quarter. And even if you have top line, bottom line beat, but you have bad guidance, it's leading to a underperformance the next day, which now the data is also showing you, right? You can see that the excess return 1 day after the earnings report shows that we are a little below average, despite us having a higher average beat and a lower average miss, right? So you can see the data is already telling you that. Okay, tactical sentiment, which is very similar to the Nabo-Nazi combo. is sitting just in the middle, right above the middle. So we're not in overbought territory. We're just sitting kind of firmly in the center. This is, momentum stochastic indicator. Don't take it too, aggressively. And then also, let's have a look at the, is it this one? Sector specialist? No, this is not the one. Hold on a second. It is here. Sectors, ETS sentiment. Okay, so last week we had three sectors, right? We spoke about it was healthcare, sorry, it was financials, which we were looking for a potential bearish entry, which didn't give it to us, right? We were looking for XLF to break below, firmly below 51 or 50, right? Here, this area. We wanted it to come break this down and then come up to reject it for further downside. We didn't get that last week, right? It just kind of came down, touched, bought up, right? Which is good. That's not bad, right? The other sector that we were looking at bearish was healthcare. Now, this sector is a more probable one to go bearish. But once again, this here doesn't confirm that the trend has swapped. It doesn't mean that this break here means that we're going to go do. Nope, that doesn't mean that, right? So we need to see this come down, come back up, and then start rejecting this for another entry to the downside, right? So this sector is still as well on hold. And then I believe the last sector was materials. No, not materials. It was maybe energy. No, it wasn't energy. Let me just recollect here very quickly. I think it was one of these. Not this, not this, not this. Okay, anyway, we're going to go through it right now, so it doesn't matter. So let's have a look at them. Okay, so basic materials. It looks like it peaked out already and now is looking for a potential bearish retracement, right? But then you look at the hedge fund data, they were net buying materials this past week. So that's a bit of a conflicting one. Biotech, we ignore. Consumer discretionary now reaching the bottom of that momentum pool. So this is your Tesla and Amazon, right? Which makes sense because last week they were not performing that well, right? Then you have consumer staples, which are now kind of approaching this top part here, which is now, I feel it has a little bit more room, right? So your Coca-Cola, your whatnot, still have a little bit of room to go. Energy came down, bounced just shy. And this one, I think, remains sideways winding for a while. So I wouldn't even want to kind of play it. Financials now has that downward momentum working for it and has the capability to drop more. So I'll be looking for weakness on financials this week. This will be a good one. I'll be looking for weakness on materials this week. That will be also good, two short opportunities potentially. And then a long opportunity on consumer discretionary if it bottoms out. And for consumer staples, I think I would want to stay out of it as well as energy because these two tend to be a bit more, take a bit more time to work out. Then you have healthcare, which once again, more bearish momentum to go, right? So that's pretty self-explanatory. You have healthcare bearish. If someone can do a summary and write down all this, that would be great. And then housing, we're going to ignore, but I just posted something about the yields and potentially going long on XLRE soon because it's a nice opportunity there. And then if you look at industrials, there's a little bit more momentum to go. If you look at oil producers, now it's bouncing. So you can see this is a little conflicting compared to XLE because XLE is kind of stuck in the middle here, but it hasn't really fully gone all the way down. So those two are going to be a bit conflicting. And then lastly, you have retail, which is now reaching the bottom. So you'll have a potential bounce opportunity. And semis are squeezing in a tight pennant or wedge, right? Even on the momentum indicator, it's squeezing. So semis are the one that's really, really squeezing hard. Technology, you can see we came on the bottom here. We bounced off, and now we'll see if we can actually start to rebound here. Last week, we were kind of moving on the way down, right? And so I was mentioning to you guys that there was a high chance that technology takes the lead going into the next couple of weeks, right? So we're seeing that. And then utilities here, of course, just kind of doing its thing and approaching the top here. So not really much on utilities there. Obviously, there'll be a rejection opportunity, but I think it'd take a whole week to play out. We have a 4-day week anyway, right? ETF trading flows. You can see that achieving China technology exposure through ETS, the desk has been very active with Chinese technology exposure, KWeb, and CQQQ, China Technology. They have these two ETFs. Both of these have a 40% overlap in holdings. But remember that KWeb's daily average on-screen volume and asset base is multiples higher than CQQQ, so liquidity is higher in KWeb. Now, these two are very hot, and I've told you guys multiple times about this. This is one you hold for like the next 5-10 years. You don't look at it, and then you wake up one day and it's 5x, right? Because it's, Chinese economy is very, very unpredictable. So don't invest money that you can't lose in here. And if you look at the KWeb cumulative net flow, I wanted to show you guys this chart. After Chinese stimulus came out, you guys remember that, in like 27 September-ish. Look at that massive inflow. And then the main thing out of this chart that I want you guys to see is when that outflow came out, it was already much higher. So a lot more people stayed in the trade than exited the trade. Almost half, right? If you think about it. So half the people got out and half the people stayed in. And then now on this DeepSeek headlines is when we're starting to see another rally in KWeb, right? And you'll see the same for the CQQQ cumulative flow wasn't that much because remember, once again, your liquidity is different here. So, okay. Then data in the week. I already posted the calendar about that. And apart from that, I don't think I have anything in this here. Oh, yes, the calendar. Yeah, so you can see the calendar on your own. This week is a bunch of economic data. I haven't gotten the full prime book report yet with the full rotations. Once I do see that one, I'll let you guys know. But in terms of earnings also, a bunch of smaller cap companies and a few large cap companies earnings here. Baidu, notable. You have Etsy. This one I might play for earnings. And then you have Carvana, Alibaba, Walmart this week, Mercado Libre, Block, which is XYZ Square, or rather last time Square, Booking Holdings. You'll have so you have a bunch of smaller and bigger market cap ones here this week. So this will be kind of like the last week in which earnings will actually dictate a little bit of the move, which actually this week I don't think it'll dictate much. But however, this week is the third Friday of the month. So therefore, this Friday is also OPEX. For those of you that don't know what OPEX is, it's the third week of every month where options expire and roll off, which then causes a lot of gamma to either unclench and dealers to reposition themselves. Now, obviously, a lot of the repositioning has happened last week already. We saw that happening in the flow. A lot of the flow that came in last week was focused on rolling out options and moving the trades down to the next positioning. But I'm sure Andrew will give us more color on the ETF side of this, like for SPY and etc. But for single stock options, we already started seeing them roll last week. Okay. Now, from a technical standpoint, this is a very, very awkward spot for SPX and NASDAQ, right? But obviously, the plan worked out perfectly. We were talking about the possibility for a pullback, bounce, and scenario, and then a breakout, which is kind of what happened. And now we're sitting basically back at all-time highs on SPX, right? So obviously, this is a really awkward but very easy scenario because you reject this area here, then you come back down into the 6050, 6033, this area here, which was your previous demand. And if you break out of it, then you will likely come back down to retest this and then break out even further more. So this week, since it's a 4-day week, my view is that very likely that this will continue melting up, if anything, and then the shorts will start to get squeezed, and that will lead to a bigger rally. Of course, if some news comes out, something happens, then unpredictable happens, then this will naturally come down. But I also want to see what Andrew has in terms of data for us so that we can see a clearer picture. But my view is if the market's been hanging out here for 2-3 days, then demand's already starting to build here and sellers are not stepping in, then there's a high chance that buyers may start taking control of this market again. And you can see that a little bit of that is coming through on NASDAQ because this is now forming kind of a 4-hour bull flag scenario, right? Not a perfect bull flag, but nonetheless, it is a bull flag, right? So you have that big impulsive wave up and then that consolidation sideways. Tomorrow, you could even see potentially a little more move down. come down here, retest, and then potentially break out. So my view here is Nasdaq's a bit stronger than the market. Technology tends to be the bigger allocation in the market, and then if technology rallies, everything's going to start getting pulled up. In terms of your small mid caps, IWM, we've been hanging out here in this range for a while now. This 222 has been a very, very key level in terms of volume base. And looks like a lot of buyers have kind of been hoping to step in here. You have an overhead resistance at 233, and then another overhead resistance at 244. But this is nice upside if you don't mind the risk off, is what I'm saying, right? Of course, there is a little bit of risk here, but if you took this trade to the upside, then entering long here and you take this much risk, you can still get a pretty nice 3.9 or 4 risk to reward ratio. If you just lower your risk, you even get a 3.5 risk to reward ratio because you don't want your stops to be stopped out somewhere here, right? You could take a swing trade here if you wanted to. Longer term, I would take at least you have to go really long term. Don't go short term on this. It has to be like a leap style contract. Okay. Now bonds. So last week I spoke about the 10-year yield. We had a nice, attempt to recover and push up into the 4.66 level, and now coming back down into the 4.5 level, which this is now developing into a very key area, right? And we want to see the 10-year yield. Of course, this is not going to happen so easily because we need more data from the Fed. But once the market starts pricing in the possibility for further rate cuts, remember that the possibility of further rate cuts comes with the expectation that the economy is going to falter. So you don't get the economy is great and then rate cuts happen. That's not what happens, right? The market thinks we're going to die. Shit's going to hit the fan. Then the market starts to price in a rate cut, right? Because only when the market, when the economy underperforms is when the Fed will start to say, okay, we need to do something, right? The Fed's not going to be stupid and be like, oh, the economy is so strong, we're going to just cut rates. They don't do that. So we want jobs to be bad. We want unemployment to be high. We want, inflation numbers to potentially continue to be on the higher side. This is the reason why you see, despite inflation numbers being a little higher than usual last week, what happened? The market rallied, right? So a lot of you might be confused, like what the hell is going on? Why? It's because now there is a higher likelihood that the Fed may leave interest rates a bit higher for longer. And then after that, they're starting to price in the rate cuts. Because that higher for longer interest rate scenario was already priced in, right? So remember that. So with bonds here, we'll have to see if we can actually continue to get down into the 4.2 to 4.3 level. That will be a very important part. And then for the dollar, though, you can have a look here. The dollar is in a much nicer spot, right? And so that Trump regime of the weakening dollar is kind of starting to take shape here, right? We tried to push up out of the 109, and look at this now over multiple sessions, broken from this pennant down. And if we come back down into the 106, will be beautiful, right? So the dollar will start to weaken here, hopefully a bit more. Okay. And that will, once again, if yields and the dollar continue their descent here, that is good for equities, right? Okay. Some setups that are catching my eye, obviously BABA, one of them, which now has run massively. If you have been buying shares with, all the times that I alerted them, which was like at, I don't know, 68 and then 70 and then a couple more times here, all these green arrows are where we added shares. You'll be sitting pretty now. And then this is attempting to break out of a very key level here. And you can see on 9988 right now, which is the Hong Kong equivalent of this, it's already broken out of that previous resistance here. It needs to clear this right now, which is at 134, which is actually quite a fair bit. At some point in time, obviously, you will have a pullback. So be aware of that. So with BABA, obviously, don't chase the upside is what I'm saying. Try to focus on understanding that this will eventually come back down. If you haven't got a piece of it, stop FOMOing. We will, kind of give you more color on this a bit later. Okay, Apple. This was another great one that I saw most of last week performing. I'm sorry, I'm going through a couple of these tickers here because I realized that they are important ones. Only 3 of them. Tesla, Apple and Baba, these three only. And then later we'll do the rest of them. But Apple, very, very strong recovery after making a higher low. Okay. And now I anticipate that this will break this high and start to make a higher high potentially. Okay, at some point. So it will take some time to recover, but this is a nice setup if you haven't like gotten any exposure. Wait for the pullback, right? This has a natural resistance here from where it gapped up after earnings and then came down. So it's actually on its way to try and break that level now. And what might happen here is it might come back here, which was the previous resistance, and then reject a little bit, come back down, and make another lower high, and then move up eventually. So there will be a bit of time more for this, but what I'm saying is this bullish recovery here is looking nice so far. And with technology starting to lead, Apple may come back into the picture being the leader again. Okay, so remember, what was lagging becomes a leader. What was a leader becomes a lagger, right? And though,
but T, that wouldn't help the theory that the market's going to crash.
yeah, I saw that. The other one was Tesla, right? And now this one, man, the setup baffles me. So I personally, it's not out of the woods yet. I'll tell you that much. Okay. In terms of just pure price action, it's not out of the woods. Meaning there could be more downside. You really don't know if this is really out of the downside action yet. Because let me tell you why. You need to break and hold above 375 if you really want that upside, right? You need to break here. This is your previous support, right? Which then turned into resistance. And this needs to firmly break this level. It needs to rally past it, maybe hit this 400 supply, and then come back down to bounce somewhere here, wherever this area would be. And then we can say, okay, we have some upside. So I wanted to pin Tesla to today's discussion because a lot of you might be looking at this setup and going like, wow, this is a great dip buy opportunity. But I want to put it in front of you that not everything is so straightforward with this one. It needs to really claw through a lot of key levels here before it starts getting more upside, and you have time, so don't jump into this too much. Apart from that, yeah, I don't think much has changed. As I was mentioning in last week's blurb, let the earnings season pass. There's a fine window between earnings seasons, about 2-3 weeks, and then remember we don't have a Fed meeting in February and March, so the next one will be in April. So the market will have a lot of time to digest and move. So just take it calmly, take it slowly. And yeah, that's all I have from my end. I'll stop sharing my screen so Andrew can get to his now. And yeah, thank you.
All right. Well, let me get back into my groove before I was interrupted. Um, all right. So if we look at last week, right, and we look at our expected move, which I think it was right here somewhere. Right. Was it right here? Yeah, it's right here. Right. Our expected move was 610.54. And our key indication for this was the 600 level, right? We talked about the selling pressure at the 600 level and why it was important, right? So if we take a look at how SPY played out, right, and we look at those levels, I like to use the 4-hour candles, you guys know. You can see right here that all the 4-hour candles stayed above this dark pool level, which was 10.3 billion, as well as an order block came in here, right? So what does that tell you? That tells you that most likely the dealers, which were long here off of 600, right? You had the CPI print here, and that got bought up very aggressively. So as you can see, right, every single candle closing above that level. And then once we broke the 605 level, that created the buying pressure. As you can see, you came down and tapped that 605 level and you pushed up right into that expected move, which was 610.54, just about 611, right? So last week played out pretty much the bullish scenario to a T, right? So that brings us to where we're currently at, which is this week, right? And so we can see that the three different scenarios, right? The potential rejection here, which would lead to a retracement into this order block and into this potential golden pocket. A break over 610 and 612, which would lead to continued melting up into our weekly move, which is 617. And then again, if we reject here and come down, our downside move is 6010 or 602.41, right? So the main things that we're looking for, because we don't really have the algorithms on our side this week, right? You can see the algorithms are kind of, whatever. They're not really giving you much there, so we're not going to spend much time there. The NAMO is, pretty overextended on the short term. Not a ton of room. There's still some room to the upside, but not a lot. So really the things that I'm looking at to kind of give me some indication are these key levels right here. So if I look at the all the expirations, there's buying pressure at 605 and there's selling pressure at 610 and 612, right? So what that tells me is if I'm looking at this and I know that dealers are long 612 and 610, that would mean if price somehow breaks over 610 and gets through 612, that there's no longer any selling pressure to the downside. And the market then could melt up into 615. And if we break 615, we actually create buying pressure because market makers are short there, which then would allow the market to squeeze up into 611 or 617 and then potentially even up into 620. Okay. So if we somehow break these highs and go into price discovery, really what you're looking for is as long as price is over 610 and 612, this selling pressure is gone, right? And that's going to allow the market to continue to melt up and continue to push up into this weekly move of 617. Now, if price does not do that and we reject and we come back and we reject this level, well, then what that tells us is that the market makers are now hedging. Therefore, they're selling shares short, and that could push price down into this 605, which market makers wouldn't mind killing that position because that's the largest position right now. Therefore, killing all of that buying pressure and then allowing the price to close somewhere down here, which would allow all of these contracts to expire worthless. Okay. So if we go back to that picture, we can see that the largest amount of exposure is that 605 level. So market makers would not mind pushing price down below 605 this week. That would allow all of these contracts to get crushed and killed, right? And then they would collect all of the premium, and then maybe we bounce later on, right? So those are the two key things to be paying attention to this week is the 610, 611 level. And can price close above here and allow us to melt into 615 and then up into our weekly move of 617 and maybe even potentially 620? Or do we reject here, allow the market makers to start to sell shares short, therefore hedging their positions and push price down below 605, killing all of these calls, collecting all that premium, and maybe bouncing in this golden pocket area? If we break below this $10.3 billion dark pool level, which we know that there's buyers here, if we start to close candles below here, then things get interesting as we come further down. Okay. So those are the key things to pay attention to. The chart is posted in all the groups, so you guys have access to it with all the key levels on it. Make sure you're paying attention to them. But essentially, we're watching for price to break over this 610 to 612 area. Now, if we look at the gamma levels, bear with me, they updated my website. We can see for this week, this is for this week's expiration, there is the 610 level, there is the 615 level, right? So if we hold above 610, we break that 612 area, there's a good chance we're going to push up into that 615. And if we break below 610, then there's a good chance we're going to come down into that 605, which is your biggest support down here, okay? So definitely paying attention to those levels this week. We only have 4 days, so it is a short week. So we'll be watching for some type of aggressive move here sometime throughout the week. Again, I like to watch the 4-hour candles to kind of give me insight into what might happen. But those are the key things that I am looking for this week. Now, like T, just going to go through a few tickers. Like Baba, we talked about this one quite a bit on previous sessions. And you can see that we came down nicely into the golden pocket, did our little liquidity sweep right here, where we came down, took those lows out, reestablish those lows. Then you use that as your stop loss, and you got your move right into the upside. So Like T, this is a great looking setup here, breaking out of a multi-year base. If we can start to close candles above these order blocks, I'm looking for 132 and then 150. And then the longer term position, if we break out of this zone, is all the way up into the golden pocket, which is 235 to 259. So far, great move there. Another one that we talked about was NVDA. And if you guys recall, we talked about the liquidity sweep here on NVIDIA, which was right here, broke out of the box, swept the lows, came back in, reestablished above that 119 buying pressure and selling pressure area, added more buying pressure at 124. And you can see how it squeezed up nicely. A little bit of a bounce here where dealers were long, tells us that dealers are the ones that were buying this, and it pushed up right into the golden pocket. So the next thing we're looking for is a break over this 140 level for continuation up into 150. That'd be the next thing you're looking for if you're still holding on to NVIDIA here, whether you're doing equity or you're in options contracts. Okay. So that was another one that moved really nicely. And then like T with Apple, we talked about this box. And if it breaks this box, we like to move into the golden pocket. You can see that played out as well. Nice retrace here into the golden pocket and then nice bounce. So if it can break through here, then I agree with T that this could be making a move here up into all-time high territory. Okay. A few others that we talked about, and this all leads into the narrative that tech could be the leader, right? We talked about Meta. We said as long as Meta stays above 700, this is going to work its way up towards 750. As you can see, we held above 700 nicely, added selling pressure right here, broke, and we continue to melt towards 750. There's also rumors that Meta is going to have layoffs here on Monday or early this week, or sorry, Tuesday or early this week, which could lead to a nice push here from Meta as layoffs are bullish. And then lastly, Netflix, right? We talked about Netflix here. As long as it stays above 1,000, this is going to work its way up towards 1080. And as you can see, came down, back tested 1,000, which was the gamma level. And then it bounced nicely, pushing up towards that 1080 level. Okay. So now the question is, well, if tech is going to take the lead, what's going to happen next? Right? Google is one that I'm keeping an eye on because, like NVIDIA, a very similar setup where you had this established low. You came down, broke that low, liquidity sweep, reestablishing that low. And so as long as it stays above this level, I'm watching for a break here up into 190. And if we break 190, then we work our way up into 195, which is the weekly move, and then up into that golden pocket, which would be in the 200 area, right? So, right, when you're looking for that rotation into tech, you're looking for those stocks that have kind of been lagging, right? Microsoft is another one that has just kind of been chilling down here, hasn't really made the move just yet. Again, just trading in between this consolidation here, right? You have a high here and you have an established low here. So you're waiting to see what happens. If this holds, and you're looking for that move here into the upside, right? So very simple evaluations here. If tech is going to take the lead and we are going to go into all-time high territory, right? And the market starts to melt over 610 or 612, then essentially, right, some of these mega cap tech stocks are going to wake up at some point. And when they do, that's when the market is really going to push into all-time highs and really start to make this move, right? So those are what you want to watch out for. If we are going to push into all-time high territory, then definitely keeping an eye on some of these mega cap stocks that have kind of just been chilling. Apple, Google, Microsoft, right? Are ones that could wake up here pretty soon. Meta and Netflix are already in price discovery, and you can see the moves that they've made and the strength that they've made over those key levels, right? If you go back and look at those key levels here, like you can see the strength of them, right? So where is it? Sorry. They updated my stuff and now I gotta get used to it. Okay, let's clear all that. Oh, there we go. Right, so this is Meta, and you can see, right, it broke, well, 700's down here now. 700, so you've got 730, 740, and there's 750, right? Your key level there, and there's your support at 735, right? And then you go to Netflix. and here's Netflix, right? And it's right at that 1060 area. So big wall there. So if you get through that, you're most likely continuing your move into the upside there. Um, Now, the one that I am keeping an eye on is Tesla for a little bit of a different reason than T. And that is because market makers are long at 400, and that expires this week. So if market makers decide that they want to go kill all of those contracts, those are all puts that are in place by customers, then they might squeeze Tesla up into 400 this week to try to kill all of those contracts. So I'm watching Tesla for some type of squeeze or some type of aggressive bullish move into the upside to go tack those 400 positions because they do expire this Friday. So if they want to go kill those contracts, this would be the week that they would go do it. So just keeping an eye on Tesla for that specific reason. If we get that aggressive move towards that 400 level. So that's what I'm keeping an eye on here. It did bounce right off of this 350 level. So again, a good sign. Just needed to break the high. So, right, there's a, bounce right there. It comes back and breaks this high, right? This can easily move 20, $30, right? So that would put you somewhere at, $30 to put you at 395. So that puts you like right here. That would kill most of these puts that market makers most likely had to sell here. So definitely something to keep an eye on here. This Tesla 400 level with all of this exposure. I'm trying to pull it up, see if we can get it loaded. There we go. You can see the size of the position here. So you can see all the exposure here at 1021, and you can see that this is the exposure right here. So buying pressure at 350, that's new. So that means that customers went long at 350, most likely hedging these positions. So over 350, I like a push to 400. That's what I'm watching for. So I'm going to add that buying pressure level there real quick, and then I'll get into your guys with questions. So try to make it as quick as possible so I can get to questions. We only got like 20 minutes, so I'll try to get to as many as I can. Okay, buying pressure. There we go. All right. Lulu. Ooh, nice little rejection. So here's Lulu. We talked about Lulu and it was down here. You can see the move that it made into the golden pocket. Looks like it's rejecting. Again, this would have been a great place to short, right? Rejecting the golden pocket. Easy evaluation there. Um, Ideally, let me get rid of this guy real quick. That's done. You would look for a pullback. Let me clear some of these levels because these are old. Okay, and oops, wrong one. Lulu. Yeah, it looks like it's just got one big support down here, 367, 365, 360. So yeah, below 360 doesn't look good. So definitely below 360, I would be a little concerned. It's not something that sees a lot of options activity. Yeah, it looks like a large put order there. Yeah, see, you don't see a lot of options activity on it. So yeah, I mean, I would say it's like 367 was what that level was, 367.50. Support, so it was 367.50, 365, and 360. 365 and 360. Did I get that one? 360. So got to get through that area. If you get through that area, then yeah, it looks like it could have some downside, potentially down into about 289 to 271. 289 to 271. Here we go. All right. So, XYZ has earnings, so it's not really gonna matter what I say. But it looks like bull flag going into earnings. Still needs to break through 100. If earnings are bad, I would expect it to come down into my golden pocket down here, which is 69 to 65. But you have earnings on Tuesday, so tomorrow. So it's not really going to matter what I say. Earnings are always 50-50. Plus, if you're buying contracts, you're also paying for juiced contracts. XYZ. You can see here the biggest level of support is 84. So below that, you're looking at 80, and then below 80, you're looking at continued downside. A little bit of resistance here at 90. So again, it's not really going to matter what you say because earnings are going to decide this. So essentially, if it's bad earnings, you'd look for it to come down to here. If it's good earnings, you look for it to come up to here. You want to look at the expected move if you're going to play earnings. So you need to go into whatever Discord you're in. If they have a stock bot, you're going to go /ER, and then you're going to put your ticker XYZ. And so for your contracts to not get crushed, you're going to need 11.95% move. So that's essentially what you're looking at here. I have it potentially coming down first. That's me. I don't like to overpay for stuff, so I'm looking for something like this. Will I get that? I don't know, but that's what I want. So we'll see what earnings does. BSX started shares at 60. Been buying it at each new level. Seems overbought at RSI over 70. Want to add again. What is it? BSX? BSX. Yeah, it's overextended. So, I mean, it's in price discovery. You need to wait for something to give you some kind of signal. I mean, looks strong, but yeah, I mean, so far everything's been getting bought. So yeah, I would just, if you like it, I keep buying it. But yeah, no signs so far. Definitely overextended though. Today's dividend day for BX. BX, is that BlackRock? BlackRock, isn't it? Oh, Blackstone. Close enough. I already did this, so I have a pullback. So this was a lower high, right? So this is your, right? So this is your wave down, your liquidity sweep comes up, gets rejected on the golden pocket, comes back down. So essentially, like, I mean, I'm guessing you're playing a pullback. I mean, if you're playing long, it needs to break the high. If you like it here, you're using the low as your stop loss. But now you're making lower highs, right? So you're starting a downtrend here. So you either need to break above this to break that structure, or you're going to continue your way down, right? Ideally, my entry would be down here. Not saying you're going to get that. Again, not a stock that sees a lot of options flow, so you're not going to get a ton of data from it. Maybe, let's see. Yeah, so it looks like it's got support at 160. So support at 160. Looks like that's what it bounced off of actually, right off that support. Yeah, bounced off the 160 support. So close under 160, you're probably looking at more downside. Bounced right off of it. Problem is you also have a back test of this high, which then could lead to confirmation and then a higher move. So you got to watch out for that as well. Today's dividend day. I guess it's on my long-term watch list. Okay. You mean look at square T? Do you mean, yeah, XYZ. Yep. All right. Is that it? Oh, we cruised through things. I'm gonna take a look at Amazon. He was talking about Amazon. Let's see. So Amazon almost came down into the golden pocket. It looks like it did on earnings. You see it followed the pattern pretty well. So yeah, I mean, take a look here. Let's see what these levels are, if they're still active. This doesn't look too bad. I know T was talking about potential bounce here. Let's see. Amazon. Yeah, so Amazon's got a big wall at 230. So we're going to go ahead and get rid of these levels here. And 230, we're going to put the gamma level there. We're going to get rid of this buying pressure level here real quick, and then we'll revisit it. So this is gamma resistance. There we go. So there's the 230 gamma resistance, and you can see that we rejected it right there, right? So now we want to take a look and see, okay, is there dealer positioning here? Elf also has earnings, so you guys want to take a guess at what I'm going to say about Elf? No, dude, have you guys noticed that I wear like a different hat like every day? I have so many hats. Okay, Amazon. I live near the Bay Area though, so yeah, look at that. So Amazon is massively long 235, as well as buying pressure at 230. So 230, 235, and 240. This 235 is definitely the most interesting because if price gets over 235, then dealers have no actions. They can let it melt. So we're going to make note of that. 235. And that would be selling pressure. And then we're going to mark, looks like all the levels that I just deleted are actually important levels. 230, that's going to be buying pressure. Did my gamma level not match? 230, there we go. I'm like, what the heck? There we go. And then we said 240 would add a little bit more buying pressure there. Right, there we go. So yeah, so this actually doesn't look too bad. Over 230, you get buying pressure into 235. If you break 235, selling pressure dies, market makers are long, and they can let the market melt into 240. And if you break 240, then you squeeze into all-time highs again. So, oh, it already had earnings? Oh, okay. I thought Elf was one of the ones that was up and coming. Uh, Elf got hammered, didn't it? That's what it was. Yeah, that's rough. It looks like it hit the golden pocket. So this is a tough one. I mean, this is where I like to take risk. So it might consolidate down here though. It doesn't necessarily just bounce right away, right? It needs to establish itself here, right? You might range for a little bit and then break to the upside. But it did come down into the golden pocket, which we did talk about. Now the question is, do buyers find value down here? So remember with Lulu, it took some time, right? You take a look at Lulu, it kind of had this quick little bounce and then it consolidated here for a bit. And then it started that incline. So if you like it long term, then it's good. If you're trying to day trade it, I would be careful. Could definitely take a second. Let's take a look, see if there's anything here. Again, it's not a stock that sees a lot of flow. Looks like it's got a wall at 73, so over 73 looks okay. Right, so we're going to go ahead and mark that real quick. Um, oops, 73. There we go. Gamma resistance. We could take a look at positioning. I don't know if you're going to get anything there. Oh, let's see. Looks like some bullish flow came in, 4.7 million at 70. That's for the back end of the year and 65. See if that created any levels here. 65 and 70. So customers are long, 65, dealers are short. So buying pressure over 70 and over 65. So buying pressure at 70. So if you wanted to go long here, you'd be using 70 as your potential area. As long as it stays above 70, you'd be okay. If it loses 70, then dealers have no actions and they can just let it fall. You'd also be breaking the golden pocket, which could bring you all the way down, right? So definitely got to be careful here, but it's an easy evaluation if you like it. QQQ exposure levels. Let's see. QQQ exposure levels. Looks like 540. 540 is your biggest level you got to get through, and then you got some smaller levels here and there. Let's take a look at it on the week. Yeah, 540 again. Let's take a look at the next week. 540, and you can also see that 550 is building out here for the 28th, which is next week. So over 540, most likely working towards this 550 area. So not too bad, but essentially 540 is going to be your key area you got to get through.
Did they change the UX of this?
They what?
Did Quant Data change the user interface of the?
Yes, they did, and I've been trying to get used to it.
Oh, it's wow, interesting.
Yeah. So not a huge fan of it. It's kind of growing on me, but I had to play with it a little bit to get back to at least my two screens that I like.
Yeah.
But I figured it out. I do like how much clearer it is to see the dollar amount. Like that's 1.47 billion on the call side and only 93 million on the put side.
Mm-hmm.
So it's a lot cleaner to see that.
Yeah.
But and they got this little draw thing down here, so you can go
Oh,
like
that's
all.
pretty cool.
So
That's
you can kind of see everything. But yeah, I definitely had to play with it a little bit to get used to it. So yeah, I was waiting for somebody to say something. So Tesla here, right? Big level at 355. This is the week. Again, right? There's 360, there's 380. So again, I like Tesla here if it can go attack that 400 level. There's that 375 that you talked about. There's 400.
yeah.
So definitely, yeah, you got to like zoom out a bit and you got to play with it a little bit to make sure you're looking at the levels right. But definitely gives you some pretty good information. Okay, did I get everything? QQQ, XYZ, got it. Elf, got it. Yeah, Apple, you can see 245. It's got to get through 245. You got you got 250 right there for net for this week. So again, if it gets through 245, most likely going to hit that 250 area. So it's clean. It's clean. IWM. Yeah, IWM, you got to get through this 220. Was it 226? I think 230 is still kind of the main area that I've been watching
Yep.
here. That's right there. Yeah, 230. There's 230 for this week. So you still got to get to that 230 level. That's been the name of the game with IWM here this whole time. Can it get through 230? So let's see, 230. Now that is a massive, geez, that expiration. Look at that bullish position by customers for March 21st. That is a huge amount of exposure. Let's
That's
see.
gonna roll off.
Let's go take a look. Let's see.
They're gonna get clapped. Yeah, I almost guarantee it.
So I wonder if it's 215. I think it's just 215. Is it 215? Let's see. 215. Yeah, it's this. It's 215. So this is where people get tripped up. Let me see if I can see the whole position real quick for you guys. Then we'll call it a night. This is where people get tripped up. So no, okay, so it's like that. Let's see. March 21st. Oh wait, did I not do 215 on that one? Oh. 321. 215. Okay, 10 million in sold puts. Maybe it's call side. Let's see. Okay, 321 and 215. Oh, it doesn't give me 215? That's weird. Not give me 215, 321. Oh, it's not gonna give it to me. Maybe it is those puts then. Because it looks like dealers are short, customers are long. So this would be the customer's order, 13 million on the call side. So bought calls, that would make them short. So yeah, dealers are getting squeezed off of 215 right now. So as long as it stays above 215, it's bullish. Yeah, I mean that's, and then 221. 221 is 221 doesn't show anything, so I can't see that. I don't know what 221 is. So 215, March 21st, there's a massive, massive long position for customers. So we'll have to wait and see. I think it'd be bot calls, but it doesn't show bot calls. What's the open interest look like? We'd have to look at the open interest. For some reason, it only shows those puts. So I'm wondering if it's sold puts. Oops, wrong one. Wondering if it's sold puts. Might, because I mean, 8 million, is it a spread? This is 8 million in sold puts. This is 8 million in bought puts.
I think they got rid of the position entirely.
I think so too. They
Yeah,
bought them and sold them.
maybe they rolled it, but very likely they bought and sold them.
Yeah, I'm not sure. Maybe bought calls. Either way, dealers are short, customers are long. So if you're over 215, then that creates buying pressure. So once this makes a break through 230, most likely dealers are going to get squeezed pretty hard. They're going to have to hedge, right? So that's kind of how you would use that information is once it breaks this area right here, then dealers have to hedge aggressively, which is going to squeeze it up towards this golden pocket or this 240 level. So you can see that, the buyers came in on that dip. So they came in, they bought that dip. So you're just waiting for it to break this 230 level. That's essentially what you need, and you just don't have it yet. So, well, okay, it's not retail. So keep in mind, customer is not retail. Customer is, it could be a hedge fund that buys a position. It's not retail. So just think customer is whoever the bullish individual is. And dealer is the individual that the market maker that has to sell the contracts or, fill the order essentially. Yeah. So, all right, guys. Well, that's going to wrap it up. So I wish everybody the best of luck this week. Remember, if we break into all-time highs and tech gets going here, things definitely could get interesting this week on a short week. A lot of people are going to try to go short here at
Yeah.
all-time high territory. So just keep that in mind. If price gets over 610, 612, then essentially, right, market can start to melt towards that 617 target. And we'll see if we can finish off this move and then go into next month. So keep in mind that next month is a quarterly expiration, and that usually can get a little bearish. So don't be too crazy. So other than that, I got nothing else. So T, any parting words?
No, I don't think so. I think you summed it up pretty good. And now it's just remember that you have to focus on the ones that were lagging. They will start to show whether they're going to lead. So look out for those indicators. That's number one. And number two, remember, even though we are hoping for tech to rotate back in, it's not a guarantee. So always at the back of your head, always be prepared for alternative scenario. But that closing remarks on the all-time high is, I think, the perfect way to sum it up. Yes, we are at all-time high. A lot of people are going to start hedging, expecting for another wave down. And you have to be aware that if we continue breaking upward, then that's going to create even more pressure for upside scenario. So just be aware of that. It'll be something that you have to keep watching this entire week and just playing it pivot by pivot. As long as you break on SPX, as long as you break on NASDAQ and you continue higher, that's going to be the direction that we will likely choose. When earnings start to play out this week, I mean, the last of earnings start to play out this week, you'll get even a clearer picture. So right now, all the focus is on China. If you look at Hang Seng Index right now, it's up 2%, right? And so even Baba is going to open up higher. A bunch of stock will open up higher. All your usual suspects. So be aware of that. Don't go crazy on any single trade and take excessive risk. Always manage the risk. We had recently I took a trade on SoundHound. It went bad, right? Things like that are going to happen. Like you get announcements all of a sudden that, oh, NVIDIA dropped that company. That's going to happen. But if you went crazy on risk, then only your portfolio will get destroyed, right? But if you took very minimal risk and you're controlling your risk all the way through, which is the name of the game, then it will not really affect you. So be aware of those things. These things will happen. Position yourself accordingly. I've given you the sector breakdowns. And I will do a more in-depth review of the sectors in the next 1 or 2 days so that we can follow through with that. And I'll post it on both Discords. Yeah, I usually post all of the things on both Discords now. So you should be looking at everything either on T's updates or the VIP channel on Andrew's Discord. And on mine, it's usually in research reports or on the trading floor. So that's all we have. We hope that you have a good start to your week. It's a 4-day week. So, yep. Oh, and last final comments. I put out a blurb yesterday about one-on-one sessions. I got a few people reached out to me about those. If you are interested in the one-on-one sessions, like private mentorship for whatever reason, please reach out to me because I'm going to wrap those up by the end of next week. When I say next week, I mean this week for the next quarter. Okay, so just reach out to me if you're somebody who's struggling with either trading or investing, or you want somebody to do portfolio management, but you don't know how to do it, you don't have the time to do it. That's something that I'm slowly getting into now. And yeah, that's all.
Bob is at 130.
There we go. Boom, bam, boom.
Have a good one.
That's entering the golden pocket right now.
Yeah. Yeah. Cruising.
Expect
Cruising. We're going to 260
I really hope
on
so.
earnings.
I really hope so because I have a fat Baba position, so I would love that.
All right. Have a good one, everyone.
Have a good one, guys. Take care. We'll see you in the morning.